Hey, what's up, everybody? It's Joe Giunta with Team Take Profits, here to help you trade and get paid. In today's video, I'm going to talk to you about popular chart indicators. I'm basically going to walk you through TradingView and show you a lot of the different indicators that people use to make profitable trades in the market. I'm going to explain to you what they do. I'm going to help you to understand how to use them. And by the time you get done with this video, you're going to understand the indicators that we use in the Forex market. I'll see you in the video. All right, guys, so we're here and we're going to talk about popular chart indicators. So before I get started, let me just tell you, as you've been seeing, we got a lot more content coming on the channel. Make sure you like, comment, subscribe. If you have questions, put them in the comments below. And I'm here to help you. I want to be able to talk back and forth with you. I want to help you answer your questions. I want to help you become a profitable trader. So put your comments in the sections below, like the video, and make sure you sub. Now, not only subscribe, but the little bell next to subscribe to get the notifications, because we're going to be dropping a lot more videos, a lot more valuable content and trading information. So make sure you click that notification bell so you know when we're dropping the next video. In today's video, we're going to talk about popular chart indicators. This is indicators that a lot of different Forex traders use. Some of them use them and with different strategies. They can be applied in many different ways. But really, I'm not going to show you a lot of the strategies. I'm just really wanting to show you today what they do, and you can kind of determine, which is really cool. Does this indicator help my strategy get better? Because really, guys, the cool thing about Forex is you don't have to do my strategy. I don't have to do your strategy. I can do what works for me, and you can do what works for you. It's really about making sure you catch the right entry and exit. It's about making sure you're not trading against the trend and doing, silly stuff. We want to make sure you understand the basics. But for the purpose of today's video, I want to help you understand what these indicators do, these popular ones, so that you can see, does this add some value to my trade plan, to my strategy? And I think it will. So let's start out with the most. I got a few of them on here. I'll add a few more in a minute. The most popular ones are the moving averages. A moving average is a simple line. It's just a line that shows the average price. The end of this line here shows the average price of the last however many candles. In this case, it's a 10. You can make that 10 into a 20, a 50, a 1, a 9. You can be any number. You can make the moving average. And so the bigger the number, the more information you're going to get. The smaller the number, the less information you're going to get. The simple moving average is just going to take the last, it's basically going to take the closing price of the last 10, 20, 50, whatever the number you choose, candles, average that price out, and that's where you're going to be. Okay, that's your moving average. Now you have your exponential moving average, which is very, very similar to a simple moving average. However, instead of just taking the closing price of the last 10 candles, it's going to take the price of the last 10 candles, but it's going to put more emphasis on the last 30 to 40% of the candles that you take. So in this case, on a 10 EMA, a 10 exponential moving average, it's going to take the last 3 or 4 candles and put the most emphasis on that, which is why in this case, you see it kind of pointing down in this direction. It was pointing down, and took a sharp turn down because you see these big moves. That's an exponential moving averages. You can use the moving averages with crossovers to identify trends, support and resistance. You can use those as indicators of where the market is in price action overall. It's a really cool indicator. One of my favorites I use a lot, especially when it comes to scalping, is a very popular indicator called a Bollinger Band. Now, a Bollinger Band is interesting because it's basically a zone from the top to the bottom of price action that is going to basically tell you where the price is going to stay within. Now, here's the cool thing about it. The Bollinger Band is interesting because you have several different strategies with the Bollinger Bands. It basically, it's there to measure volume and volatility in the market. So here's how it works. It's basically, imagine a support level, a resistance level on the top, a support level on the bottom, and a moving average all put into one. Okay, so you have a resistance on the top where it's pushing it back down. You have a support on the bottom pushing it back up, and then you have a moving average in the middle, kind of just keeping the middle of the band. Now here's the cool thing. Watch. The middle Bollinger Band kind of acts like a magnet, and it's always going to try to draw price back to its average, back to the beginning, back to the middle. Okay, the top is always going to push it down. The bottom is always going to push it up. Here's what you end up seeing. There's different ways to trade this. There's what's called a Bollinger Band squeeze and a Bollinger Band pinch, or as they call it, or a Bollinger Band bounce. Okay, and so in this case, you see right here. Let's kind of look right here in this area. Okay, this is known as a Bollinger squeeze. Okay, this is where price was moving down hard, started to move up, but then had some sideways movement, and we really lost volume, lost a lot of volatility. A lot of the noise got quiet, if you would. So you see the Bollinger Bands kind of got small, right? They pinched in on the price action. So now suddenly you see it start to spread out a little bit more, and it still stays thin, but you don't really have massive moves up and down right now. You just kind of see it in close. But watch this. Look back, look over here. You see how over here it was kind of moving a little bit more sideways, but then now you see the Bollinger Bands opening up. Now it's like the mouth of it is kind of opening up. What that's doing is showing you that there's a lot more noise coming back into the market. There's going to be a lot more volatility coming back into the market. And so when you see them open up like that, basically it's going to continue in the direction, and you're about to see a strong move in a certain direction. So if you see price action below the moving average or the middle Bollinger Band, and you start to see these spread out, which means volatility is coming, meaning there's a strong move coming. You're in a strong move. Okay, so that's how you use the Bollinger Band. Okay, then you have the RSI. Let's go down to the RSI. The RSI is really cool because it shows you the overbought and the oversold areas. This really helps you with the strength of the market, and it helps you with supply and demand. So when you see like up here, okay, let's kind of move over here. When you see that the price is up here, notice how it's following the candles. Okay, here it's following the candles. When you see it up here like this, and you see it's at a very, very high point. Now you look at this up here and you say, well, man, yeah, it's going up, but how do I know when it's going to come back down? Well, the RSI is good at telling you that, because generally it's not going to get too much past your overbought, which is your high point. This is a 72 and a 30, and so when you look at, a 70 and a 30. When you look in here, it's not generally going to come too much higher than the 70. Some people set it to 80, some 68. That's not for this video, but this is the overbought zone. When it gets up in here, you're starting to see, okay, buyers have pushed it all the way up in here. Eventually, the sellers are going to have to come get back into this. And so you see here, it breaks it, gets a little retest and drop. You see up here, it breaks it, will retest and drop. So the RSI, the relative strength index, really just shows strength in the market. Is what I'm seeing up here going to continue? Well, what does the RSI say? Is what I'm seeing down here going to change? Well, what does the RSI say? Here's another interesting fact about the RSI. There's a little thing called divergence that you can find on the RSI. That's really interesting. I'm not gonna look through to define perfect divergence, but I just want to show you. You see a downtrend. Let me just kind of mark it out for you. Okay. You see a downtrend. All right. Now, here's the cool thing about it. Let me show you something. Divergence means, which direction is that going? Oh. Which direction is that going? That's going down. This is showing bearish movement. Okay, watch this. Let's take that same area and kind of move this a little bit. Oh, I'm sorry. Just move this out of the way a little bit so you can see it real well. Let's take that same area right here. Okay. And this is basically straight across, which means why is it coming down, retest coming down, but over here it's not really showing the same direction. It's starting to show a different direction. It's more straight across than it is down. That is minor divergence. And so what that generally means is that there's going to be a change in direction. Divergence generally means change in direction. So that's one way you can use the RSI. RSI is a cool tool, guys. Another one that I really like is called the Parabolic SAR, which is these little dots that you see on the screen. These dots, these are really cool because what this means is parabolic stop and reversal. The stop and reversal, SAR. What that means is this. Okay, you're going up, all right? You're in an uptrend, you're moving up, and let's just look here. This thing starts to move down. Notice how this candle. Let me kind of expand that for you. Notice how this candle kind of comes down and touches my dot. My dots are on the bottom, and then suddenly my dot switches, and now the dots are on the top. And now, when you look at the overall, the dots move to the top. And what is my overall trend doing? I'm going down. The parabolic stop and reversal is basically going to show you when the dots are on the bottom, it's generally showing you that you can look at them as pushing the market up. When you see the dots on the top, they're generally showing you to push the market down. So dots on the bottom kind of act like support, if you would. They're pushing up. They're showing you an uptrend. Dots on the top are more like a resistance and showing you a move down. Okay, parabolic stop and reversal is a really cool tool, guys. One of my favorites. It's really good for entry, and so you know, it's a very good tool if you want to learn how to trade. It's very good for scalping. It's very good. Actually, it's really good for swing trading as well. But you know, it's very good. So now let me kind of get rid of a couple of these. I'll show you a couple of more indicators. All right, let's look at the stochastic. Let's look at let's look at the where did it go? It's trying to hide on me. There it is, right there. The Ichimoku cloud. Okay. And one more. Let's look at the MACD. All right. So you say, whoa, my screen just got crazy. So here's the thing, guys. The Ichimoku cloud is a very complex indicator that basically it's gauging momentum, it's gauging volume, it's gauging volatility, and it almost tries to be a little bit predictive rather than reactive, but it is still an indicator that is reactive and you know, cannot be relied on solely by itself. When you look at the Ichimoku, you have this little cloud at the bottom that's generally going to show you the volume of how it comes up. You got your moving averages and your volume lines. Here's the cool thing about an Ichimoku is that when you come to this area right here, you come into the inputs, you can convert it all. You can show how it lags, which the Ichimoku does lag a bit. And you can kind of see your lead lines, you can see your lagging span, you can see all that and adjust that based on you know, what it is, that what level of importance that you want to you want to see, and you can adjust to see your periods. It's a very cool indicator. Very complex. I wouldn't recommend this to the beginners, beginner trader, but it's a very cool indicator. All right, now stochastic is similar to an RSI, not the same but similar. Really, it's measuring your overbought and your oversold zones, but it's doing it a little differently. It's doing it based on some moving average. Okay, so rather than RSI just showing you the actual strength of the market, the stochastic is actually giving you some moving averages inside of the overbought and oversold zone. So now it's kind of showing you moving averages. You can use it for crossovers. You can use it for the overbought and oversold like you do the RSI. And you can also use it for divergence, which is really cool. Stochastic is a very, very good tool that, basically is going to give you relative strength index information, but also moving average information at the same time. And the only drawback to the stochastic is that it probably lags more than most other indicators. It's generally going to move a little bit more behind. The stochastic and the MACD, which is what I'm going to show you now, are probably the two most lagging indicators of all of them. The MACD, let me kind of delete these ones so you can see it better. The MACD, okay, is similar to the stochastic, where it uses moving averages, showing you the overbought and the oversold, but it also gives you the volume bars. It gives you the volume of, of the current move at the same time. So rather than just moving average and overbought, oversold, giving you moving average and volume together to really be a very clever and creative tool. The MACD, however, does lag a lot. Very good for entry. It's very, very good tool if you want to find good entry in the market. Especially for scalping, it's very good, but again, it does lag a bit, so be careful about that. These are just a few of the indicators, guys, that people use in the Forex market. There's a lot of different ones out there, so use the ones that are best for you. Now, if you go to TradingView, look, there's a ton of them. I'm not going to go through each one of them. There's oscillators, which is a whole nother video in itself. You have the envelopes. You have, there's a lot of different things that you can do. Momentum, you can do money flow. That's another cool one. The MFI is a pretty cool one. You can use pivot points. That's a really cool indicator, especially for scalping. It's a great one. There's a lot of different things you can do in here, guys. Volume, vortex indicators. Again, you want to find and test these out. Test them on a demo. Make sure you understand how they work and how to use them before you go trading your live money on them. And always remember, and I say this at the end of every video that I do about indicators, I want to encourage you to trade price action. Indicators by nature are going to be reactive. They react to what the market is doing. Any indicator, a moving average, a Bollinger Band, a MACD, a RSI, whatever it is, can only do what it does once price does what it does. Because what the RSI, the moving average, the MACD, the stochastic, what those things do is they measure price as it moves. Well, you can't measure what hasn't already happened. So the price has to move before the indicator can do what it wants to do. So if you're trading based solely on indicators, you're always going to be a tick behind the market. You're always going to be a step behind. You're always going to be chasing the market. What I want to encourage you to do is learn how to trade with your support and resistance, your zones, your support, your supply and demand zones, your trend lines. Make sure that you understand price action. Make sure you understand the price points in the market. These little, these little prices you have over here. This is not just numbers. These are very important. And when you understand quarter points, when you understand supply and demand zones, then you're using indicators not to tell you what to do, but to confirm what the market is telling you to do. Guys, market structure, price action, supply and demand, support and resistance, those are the most important things in Forex. If you want to be a great trader, you're not going to rely on a MACD. You're not going to rely on a moving average. Those are good. They're good to tell you what the market is already doing. It's good to confirm what you're already seeing, but they are not intended to tell you what to do. Okay? So I hope this video helped. Guys, there's going to be plenty more information coming. We got a lot of education, a lot of training, a lot of even live trading videos. I've got some things we're going to be giving away in the next couple of videos, so stay tuned. We got a lot of awesome stuff happening. So make sure, listen guys, make sure you like this video. If you have questions, make sure you comment below, and let's make sure you subscribe to the channel. Click that notification bell, and I'll see you on the next video. See you next time.